Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 12th of July 2019 and we're discussing sterling's further fall from grace this week and what this means for gold and silver prices and the prospect of even lower rates in the United Kingdom. For some considerable time, effectively since the referendum on leaving the EU on the 23rd of June 2016, we have been negative the value of sterling. Whilst most of us who are associated with Illuminati Silver believe that long-term EU withdrawal is good for the United Kingdom, we are not blind to the fact that there will be some considerable pain in the interim. The UK will have to negotiate new trading terms with most countries, and even under WTO rules, it's not a utopian prospect. What makes it more difficult is the calibre of politicians negotiating these deals, and the secret agenda of others to undermine them. We were going to publish this YouTube video on Wednesday when it was reported that the pound slumped to a 2-year low, as signs of an economic downturn mounted in a market increasingly betting that policymakers will have to cut borrowing costs. The currency reached its weakest level since April 2017, as disappointing retail sales and suggestions that the UK economy could be set for its worst quarter since 2012 sapped sentiment. The bleak economic outlook is adding to risk factors for sterling, with money markets pricing in a rate cut by the Bank of England next year. However, we decided to wait, as we suspected things were likely to get worse, and more clarity would be received after we heard Jerome Powell's testimony to Congress, as what happens across the pond has a profound effect on what happens in the United Kingdom in most financial and trading matters. The pound has been adversely affected in recent weeks by concern about the UK's political risk as the contest to elect the next Prime Minister approaches its endpoint, with frontrunner Boris Johnson keeping a no-deal Brexit on the table. Sterling has fallen about 2% since Prime Minister Theresa May indicated that she would be stepping down. Earlier in the week, sterling tumbled 0.6% to $1.24, its lowest since April 2017, as mentioned earlier. The currency also slipped 0.4% to 89.98 pence per euro. The yield on UK 10-year government bonds was little changed then at 0.72%, after touching the lowest since September 2016 last week. At the time of writing, the sterling dollar rate is $1.25709, and against the euro it's 90 pence. What is worth noting, however, is that the Bank of England Monetary Policy Committee member Gertan Vlieger, speaking during a Reuters newsmaker event in London today, declared that the Bank of England might need to cut interest rates almost to zero after a no-deal Brexit, while repeated Brexit delays could also make a rate cut necessary even this year. Now, he is just one member, but we know from our own contacts that he is not alone in this thinking. We fully acknowledge that the Bank of England would prefer an agreed deal with Europe, and will to some extent paint a most negative picture if one is not achieved. However, privately, they are more concerned about actually not knowing the extent markets will be affected if a no-deal Brexit occurs, and this is now almost certain, with both party leadership contenders now stating that they will consider a no-deal Brexit situation. We have only to witness the price of gold, and to a lesser extent silver, to appreciate how far sterling has fallen, and we are of the opinion it has further to go, and especially if Boris Johnson wins the leadership, which we are confident that he will. Gold is standing at £1,127 an ounce, just £55 off its 2011 high, and silver faring much worse at £12.13, some £13 off its 2011 high, but still up compared to recent figures. Whilst we are not necessarily buyers of gold in sterling at this level, we still do not think it is hugely expensive, and is likely to rise further over the coming months, almost regardless of what it does in dollar terms, mainly the consequence of sterling devaluation. At some stage, sterling will eventually recover, but if the Bank of England is forced to reduce rates because of a hard Brexit or a prospect of one, then sterling is moving only in one direction short term. Of course, if a new accommodative Brexit deal can be negotiated, then the tables will turn. But frankly, we aren't confident that Johnson, and any team that he may surround himself with, will fare any better than Theresa May. So a hard Brexit, here we come. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.